Good afternoon and welcome to today's webinar. I know there's still a number of people joining, but I think let's make a start. I'm Oliver Moulin, Managing Director for Sustainable Finance and General Counsel at AFME. It's fantastic to see so many of you joining us today and the interest we've had in this webinar and the report. Around the world, we're seeing an increased appreciation for the need to tackle the interconnected challenges of climate change and nature loss. Investors, banks, regulators, and policymakers are focusing their attention on how financial institutions can need to take into account both the risks arising from biodiversity loss and also the role that they can play in helping channel finance in support of the preservation and restoration of nature. This is a huge, important task ahead of us, with the financing gap for biodiversity estimated at up to $824 billion per year. That's alongside the continued work, of course, to finance the climate transition. I'm really pleased that AFME has been able to partner with EY on the report which we launched today, which explores the opportunities and challenges facing the scaling of finance in support of nature and biodiversity objectives. Our aim with the report really was to highlight the case and opportunities for investing in nature, examine the current state of the market, and to explore how the current challenges can be overcome, and more on this shortly. It's an excellent time for today's discussion ahead of the COP15 UN Biodiversity Conference, which starts a week today in Montreal. We have a wonderful lineup of speakers for you today. Unfortunately, Jessica Smith is unwell and unable to join us, but we're really pleased that her colleague Romy Herdiker has stepped in to join us at short notice, and we wish Jessica a speedy recovery. So I'd like to start by welcoming you all and introducing Katie Henry, who's a director at EY and who led the team working with us on the report. So Katie, I'll hand over to you. Thank you.
Thank you very much, Oliver, for that introduction. And I have to say, we were very excited to work with you and AFME on this paper. My thanks to my wonderful team who did all of the hard work and are all on this call listening in. In terms of my role at EY, for those of you who don't know me, Katie Henry, as Oliver mentioned, I lead our Sustainable Finance Transformation team and our efforts in helping financial services deal with biodiversity and nature in the UK. It is a pleasure to be here today, and I'm really excited to speak to Romy a little bit more about what she's saying in terms of what's coming up at COP15 and beyond. I had the pleasure of meeting her at Geneva for the pre-COP, so it's really good to be reconnected, Romy, and I would love for you to take the time to introduce yourself, to tell us a little bit more about your work at UNFFI.
Thank you so much for that warm welcome, Katie, and also thank you, Oliver. I'll convey your wishes to Jessica Smith. So from my side, I've prepared some slides, and I think this is always the most scary moment in any presentation. I'm going to see if I can share them with you so I can guide you through what I want to tell you. So let's start. So as Katie introduced, my name is Romy Herdiker, and I'm the Associate Lead of UNEP Finance Initiatives Nature Team. UNFFI, as most of you will hopefully know, is working with banks, insurance, and investors to create a sustainable finance sector. We have been at the heart of the developments such as PRI, PSI, and PRB, and now are housing, among others, the net zero alliances. We were also the first platform to look into sustainable finance back in 1992 out of the Rio summit. So if we look at the report that was released today, Into the Wild, and congratulations to the EY and AFME team, it made me think of some of the numbers we have been seeing about nature. So for example, today, 96% of mammals are humans and livestock, which means that we only have 4% left for wild mammals, such as the gorilla that's now staring at you from the big screen. So I think if we look at some of the numbers we have been seeing since 1970, our global economy has quadrupled, our population has doubled, but at the same time, really nature has been decreasing. For example, we see that with the 70% drop of populations of vertebrates since 1970 in the latest Living Planet report. So I think from the side of UNEP Finance Initiative, we really echo the findings that we saw in the Into the Wild report. And tomorrow, UNEP will be releasing the update of UNEP State of Finance for Nature report that really, showed in its 2021 version to meet climate change, biodiversity, and land degradation targets. We need to close a 4.1 trillion financing gap in nature by 2050. And I think the way of doing that is by reducing harmful economic activities such as agricultural subsidies, generate new income through green bonds or low interest green loans or other products, but also invest smarter. And I think we were very happy to see some of the examples that were used in the report that you released today. So on the screen, we have some of the numbers we often use when we speak about nature, but I think from my side, what we also want to underline is that we have to rebuild our relationship with nature. So both economy and ecology stem from the Greek word oikos, which means our house. So as Greta Thunberg has said, our house is on fire. And I think part of the reason is that we have lost that connection between economy and ecology. So I think it's part of our objective as UNEP-FI to rebuild that relationship. And I thought COP15 is an important moment in time to look at that. So when speaking about UNEP-FI's nature team, we're a growing team with about 15 people at the moment, but I think we're growing quite fast at the same pace as UNEP-FI as a whole, actually, with over 120 people now. So we have been around working on the topic of nature for over a decade, often together with others. We have been developing the Encore tool, which is really used as maturity assessment for many organizations that are starting on their nature journey. We also have been one of the founding partners of the Task Force on Nature-related Financial Disclosures. And our role is really being a one-stop shop for our members to work on the topic of nature, convening knowledge, building capacity, and creating understanding. So what is COP15? So we really, at COP15, so the most important environmental event of the year is not COP27 that we've just ended, but COP15, because it's really the once in a decade chance to heal our relationship with nature. Nature loss is an economy-wide issue, so I think it also requires an economy-wide approach to solve. And as we like to say, the road to Paris leads to Montreal, because climate and nature go hand in hand. For example, 30% of emissions reduction required to align with Paris can be achieved through nature-based solutions. And this is not for official use, but we are hoping for the next Paris and not Copenhagen, of course. So I think if we're looking at the key topics from the financial sector, I think it's noteworthy to say first that we see that the interest from the financial sector to participate, join, and be active at this COP is higher than we ever have seen before. And we see part of the draft guidance that is drafted to include reference to the role of the finance sector. So we hope that we can reverse the trend, bending the curve of nature loss, and I hope that will be starting at Montreal. I think many people often look at their personal commitment, and from my side, my children will be my age in 2050, and I hope that nature looks very differently at that moment in time as it does now. So what are we doing as UNEP FI? One of the activities we have been promoting is that we have been, rallying up our members together with Finance for Biodiversity Pledge and PRI with a statement that will be launching on the 13th of December, just ahead of Finance and Biodiversity Day on the 14th, for which we already have 121 signatories with $6.2 trillion assets under management. So we're very proud that we can take the same inspiration we have seen from the Paris Climate Agreement now up to Montreal. Also, what I want to underline to the attendees today, I think it's very tempting to wait for a perfect global biodiversity framework with clear goals and targets, but it's not, the best moment to start your action on nature, if you haven't done so already, is today through identifying your risk, impacts, and opportunities, set organization-wide strategy and targets, and get involved in some of the activities that we're organizing. So, for example, for our PRB banks, we have developed the PRB biodiversity community. We also have our target setting guidance on biodiversity, which we'll be updating next year. So I think our recommendation is the best moment to start on nature is today. So this is really the bread and butter of UNEP FI, which is developing publications. So if you have some time and you want to read about, things like the readiness of the corporate or financial sector for nature-related disclosure, or what are key sectors to focus on, these are a few publications that you might be interested to look at. And then also with communication activities, yesterday we launched our session at the Nature for Life Hub, in which we had a conversation with David Craig, the TNFD co-chair, and Philip Zawati from Mirova, but also Achim Steiner from UNDP and Elizabeth Marema from the CBD Talking. So we often organize a communications event, and I think within the context of this session, I wanted to highlight the new Green Shoots webinar, which we are hosting in early January again, which provides an overview of new funds and developments that have been released in this year. So with that said, I want to hand it back to you, Katie, for some follow-up questions. Thank you for your attention.
Thank you very much. That was a fantastic presentation and very informative. I know what we are all going to be reading and attending over the Christmas holidays and into January. So I appreciate that, Romy. In terms of questions, I was really hoping to get a bit more. You talked a lot about our hopes for COP15 and how we want it to be more like Paris in terms of where we get to and achieving it. Can you, for the listeners, tell us a little bit more about what are the key components that you see that are being discussed in that agreement?
So at the moment, there are over 1,000 brackets in the draft text that need to be resolved, and the agreement needs to be reached on all of that. So if you look at our site, we are particularly interested in target D, which looks at the alignment of financial flows. And then we're also looking into the target 15, which looks at reporting, and then also 18 and 19. At the same time, we're of course not a negotiating party because we're not a state, but those are, I think, the the elements which we think are most relevant. And we're very happy that through our statements that we see the commitment of the global financial sector on implementing the global biodiversity framework, because with the Archie targets, which are the predecessors of the GBF, we often saw that partly also due to their language and shape, it was difficult both for corporates and financial institutions to align their commitments with that. And I think this GBF is very different in a sense that it's better at addressing the needs from the private sector. So I think that's something we are looking into.
Wonderful. Thank you very much. And in your talk, you also mentioned that there's a lot more corporate engagement and financial institution engagement in COP15 than there ever has been in previous biodiversity COPs. Can you tell me and the audience a little bit more about maybe how we can engage more and drive activity? What do you think is within our power as individuals working for these big organizations?
So we are aware of over 200 events that are being organized that have a focus on corporates and financial institutions. So that's amazing. I think from our side, we're looking at business days on the 12th and 13th of December. And then there is Finance and Biodiversity Day on the 14th. That is, of course, for the people that have the ability to join in person. But I know that for Finance and Biodiversity Day on the 14th, you can also go to the CBD pages and register online. Also, some of the sessions where people have allowed for joining virtually. So I think it would be interested to follow that. From the side of UNEP-FI, we intend to have daily video updates of 1 to 2 minutes. So really a news flash in which we'll be updating you on the relevant discussions. And so if you're interested to hear about what's happening there, I recommend to follow UNEP-FI on socials, so you can have like a 1.5 minute break every day in which you'll learn more about what we're doing, but also what we hope to see come out of COP15.
Thank you very much, Romy. I feel confident that even the busiest person can manage to squeeze out 1.5 to 2 minutes to listen to those important updates. That's a really great tip, actually. I will be sending that link around to my own team, I can assure you. And just one final question, because it's just so fabulous to have you here and to get your perspective and the perspective of UNEP-FI. What, if you had to take, if you wanted everyone who's attending this webinar to take away one action, one key action that they would take back to their organizations, what would it be?
Well, I think from my side is it would be to sign the statement, and also don't wait for the GBF or TNFD, or because there will always be a next moment in time when there might be the perfect moment to start on nature, but actually the perfect moment to start looking into your nature impact or opportunities is today. So that's really my key message. So we're super excited about COP15, but it shouldn't stop you from taking actions now already.
Excellent. Thank you very much, Romy. I really appreciate that, and it's been great to chat to you today, and thank you for your presentation.
You're welcome. Thank you, Katie.
Bye. And everyone else, what I would love to do now is take the opportunity to take you through a little bit of the key findings and key points from our paper, which I hope some of you have had a chance to open up and haven't been too terrified by the fact that it's just over 40 pages long. When Oliver and I first started discussing this paper a number of months ago now, we were aiming for 20 when we've ended up with mid-40s. But I think it's because there's just so much to say on the topic. But if it makes you all feel any better, at one point we got up to 80 pages. So we managed to really strip it right back to the key points. So I hope that you will all find it an interesting and valuable read. But to give you a little bit of an insight into what those key messages were that Oliver was hinting to into his introduction, I thought I would just give you a bit of an overview. So in terms of the paper, you've heard this morning, or this afternoon actually, from Oliver and from Romy a little bit of the context that led to the writing of this paper. So we've heard, for example, over 50% of global GDP is reliant on nature and the ecosystem services that it provides. But yet we've also heard that nature is declining at a dramatic rate. Other stats that I've seen, in addition to the one Romy provided us with a nice gorilla stare, include things like the forests have declined by about 50%. We've lost over 50% of our coral reefs. We've lost over 85% of our wetlands. So whilst our GDP is very heavily reliant on nature, it's declining at a dramatic rate. And at the same time, we have that funding gap that Oliver highlighted of up to 824 billion. And I think Romy also provided an even bigger number in the paper that the UNEP will be sending out tomorrow and publishing tomorrow. So there's a huge gap there to be addressed. Well, in that context, the world response has been very much at COP27 to increasingly recognise the important role of nature. And we heard from Romy that about 30% of emissions reductions are expected to come through nature-based solutions. At COP15, we're all crossing our fingers and maybe also our toes in the hope for a Paris Agreement equivalent on nature. We've seen regulators start to come out and issue concerns about risk exposure to nature because of the decline that we're seeing. We've also seen them trying to push for more disclosures and reorienting of capital towards more nature positive activities. And lastly, we've seen this opportunity, and I think the World Economic Forum came up with a great stat, which was saying that the estimate that a nature positive transition could provide up to 10.1 trillion of additional annual business revenue. So the opportunity there is huge. And when we were discussing this paper and what we really wanted it to be, and what we wanted everyone on this call and more broadly even still to get from this paper, was really a very practical guide to how that opportunity can be grasped so that we can have an impact on nature in this sphere, whilst also managing the commercial reality of our businesses. So with that in mind, the paper at a very high level has 3 parts. So the first part just sets that context. I'm a consultant, so I'm afraid it's basically the business case for why you need to care about this. But hopefully that summary is quite useful for your communications with your own organizations. So we set out that level set of the context I've provided. Section 2 really gets into the nitty-gritty. What are the financial instruments that you should consider if you're trying to tackle this issue within your organizations? What are the examples of how they've been done well? How do they work? What are the principles and frameworks relevant to them? What are the benefits and challenges of particular instruments? And then finally, in part 3, we go through the themes that are arising in the regulatory space and the recommendations that AFME has presented because of the findings of this paper. Now, I'm really pleased to say we've had fantastic engagement from financial institutions all across Europe in this paper. So a lot of people here will remember many roundtable calls where we asked lots of questions, had lots of really good discussion on the challenges being faced, what they were saying, but also had a number of bilaterals and submissions to the paper and a lot of reviewers and comments. So it's had a great input. And so I hope from that you'll be able to get that really real life experience of this to leverage. So if I go into section 2 of the paper into a little bit of more detail, because that's really where the meat of the paper is, where everyone wants to be. When we thought about natural capital finance, what we really did was categorize into 3 categories, different types of instruments that we saw. So the first type was really performance-linked instruments. The second, use of proceeds-based instruments. And then the third category was others, which is always the term where you put everything else that doesn't fit into your other category. So it's quite diverse instrument set there. But I think that framework provided a really interesting structure, because one of the things we really saw was that debt products are the ones that are currently most commonly being used. Now, If I dive into some of those categories in a little bit more detail, say let's start with use of proceeds-based instruments. Good examples of those are green loans and green bonds. And we've seen green bonds really shoot up in use recently. It's been interesting because when we think about the biodiversity space in particular, the IFC has come out with some brilliant guidance on this space, saying that really, if you're trying to tackle biodiversity through these kind of instruments, you can look at the drivers of biodiversity loss as the way to do that. So tackling things like preventing land use change, reducing pollution, good examples. But how does that really work in practice? Well, from your use of proceeds product perspective, it can mean financing benefits for businesses that also have co-benefits for nature. And those are things we're particularly seeing in the agriculture space. It can mean financing conservation activities, and it can mean financing for natural climate solutions. So there's great examples in the paper on those use of proceeds-based instruments. On the performance-linked instruments, well, they're quite interesting because they don't have restrictions about what you use the proceeds towards. They tend to have a little bit more versatility and flexibility in their use. But the challenge with them is that there tends to be there is a lack of consistency and consensus around what the definitions and the KPIs are that everyone should use. So there is some nervousness around that and the labeling. We've got a great case study in there, Care and Homes, which Barclays have provided. I really do recommend a read. And really that case study is all around care homes, which is around building new homes and developments. And as part of that, the key performance indicator they relied upon was increasing biodiversity net gain. And so that was a really interesting case study, really bringing that performance-linked instrument to life. Our third category, others, has that, as I said, a very diverse instrument set in it, but it includes things like natural capital funds and green trade finance. On the natural capital funds, I'm really pleased to say that you will not have to listen to me the whole time because we have the wonderful and leading light of Abid Karmali here with us today to talk about the Bank of America case study. But to give you just a little bit of a flavor on it, a natural capital fund is typically an investment pool which is for debt or equity and is used to finance green products and refinance them in some cases. So I look forward to, in a few minutes, handing over to Abid to tell you a little bit more about that. But when we looked at all these different instrument categories and examples and discussed with financial services, what we saw was a number of really key themes coming out very strongly. And these are the challenges that were being faced. So the first challenge we saw was that there was a lack of standard definitions being used. There was nervousness around the labeling of products as green or nature positive for fears of greenwashing. And there was a lack of defined metrics and KPIs, as I mentioned, because unlike climate, there just isn't one or two accepted metrics in this space yet. And its complexity means it's hard to get to that point. What I thought was particularly interesting was that the bond market has actually done pretty well in moving this along. And they've done that with the use of the green bond principles, which some of you might be familiar with. And if not, there is a link in the paper for you to connect through to find a bit more about those. The second big challenge we saw was around data. Access to verifiable data to measure a baseline to be able to show an impact. And the hope is, with increasing disclosures, that data will become more available for everyone to use. A third challenge was around assurance. The lack of oversight and verification often meant that many felt concerned or didn't have the confidence to really go into these products or to invest in these products. So hopefully, as we see the regulators and frameworks like TNFD develop, what we'll see is they'll be used more widely and then there'll be more assurance provided over it to give that additional confidence. And then fourth big challenge was around investor expectations. And a big part of this was around the risk return appetite. So because this area is quite young actually what we were seeing was that lack of track record made everyone a bit nervous, and there was a lot of expectation for higher returns as a result, adding a bit of additional challenge in there. The second area on investor expectations was around fee taking, because actually, historically, a lot of this movement has been in conservation. And so a lot of the funding has come through, for example, donors. So there was concerns around the acceptability or the perception of taking fees. But without that normalization of that, it will be hard to scale up these products and get them more widely used. The last big challenge we saw and we discussed was structural challenges. So really very focused on investment scale. What we saw often was that conservation projects were with conservation or small to medium enterprises, but those in many cases might provide insufficient returns. And so there was a need really to see these being incorporated into larger opportunities that would be even more valuable. And then last but not least on the structural issues, timeframes. To really see outcomes in the natural world, often the timeframe just is a bit longer than a lot of these financial products as they currently stand. It's longer than, say, a bond of maybe 3 or 8 years. So getting that match off is proving challenging. Going into a bit more on the policy recommendations, which is our final section of the paper, we had 5 key recommendations here, which we hope learn from the challenges we've heard and look to the future of what needs to happen in this space. So the first of those was around the gathering and translation of nature-related data into decision-grade data for financial services. Now, this is something that many data providers are really trying to tackle at the minute, getting asset location data, for example, and geospatial data in place, but there's a lot of work to do. Our second recommendation was making sure that there's a strong global nature reporting framework in place. So that means that AFME really strongly support the development of standards such as the TNFD, ISSB, and the CSRD. But really we'd be all keen, I think, on this call. I'm sure many of you felt the pain I felt of wanting there to be a global standard so that there is consistency between them, because that fun and games of looking at the different standards and trying to work out the difference, I feel is something we might all wish to avoid in future, having experienced it so keenly with climate. The third recommendation was around agreeing on and defining measurable, meaningful impact through metrics. So rather terrifyingly, I have to say, the TNFD came out with a paper recently which identified 3,000 possible metrics. It's hard to know where to even start with that. So the hope is at COP15 we will come out with a clear target which will help guide us and wade through all of that complication. The fourth recommendation was around standardization of product classifications. Really just to help investors navigate these products, the potentials, and to provide a little bit more confidence in the labels and what they're reading and learning about. And then finally, the development of a currency for nature. On climate, we have a reference unit here. We have a ton of carbon. But what will this look like for nature? Now, I've set out all of our recommendations and challenges, but I would echo Romy's statement. It's worth starting this journey now to learn, even if you're starting, as Romy suggested, by looking at a materiality assessment of where your risks and your opportunities might be. It's a complicated journey, but it's one we need to do to integrate into the climate space. So with that, I'm sure everyone here has heard enough from me and about the paper, but I do really hope you're going to read it. What I really wanted to do was now hand over to Abid to introduce himself, tell us a little bit more about his role, and to talk us through the wonderful case study that Bank of America submitted. So Abid, over to you.
Thanks, Katie. Just checking you can hear me fine. Great. Yeah, so I sit within our ESG practice at Bank of America. I have another hat, though, which is probably relevant for this discussion, which is I'm one of the 34 members of the TNFD. So I've been in that role since September 21 on the TNFD, and it's obviously helped us in terms of moving us along the journey that we all need to move on. That was so eloquently explained by both Romy and yourself. And what I'm going to do maybe is just give you a bit of a context for how we ended up with this particular investment in the Responsibility Climate Smart Agriculture Fund, which is included in the AFME publication. And the context is, like probably many of the financial institutions on this video, we've set out a sustainable finance commitment. So we have a $1.5 trillion commitment by 2030. It originated from a focus in climate that broadened out to include, all of the areas of the SDGs. And of course, nature positive investments are very much a part of that. So that's one important leg. The second is, we had recognized several years ago that blended finance was one of the areas that was most challenging for us, but crucial in terms of trying to have impact in areas that we couldn't normally do through traditional Bank of America, balance sheet lending or mobilization of capital through through the debt markets. And so we set up a particular blended finance catalyst pool, not the easiest of names. And the intention was to try to invest in a series of vehicles that would not expose us to first loss risk, because remember, this is Bank of America balance sheet, it's not coming out of the foundation. And at the same time, we were trying to be catalytic, so we wanted to try to achieve a 10x leveraging of our capital, meaning that it wouldn't be the right result for us to come in solely at the senior level after the capital stack was de-risked. That for us wouldn't be particularly impactful, although traditionally that's where you'd expect private investors to that's the position you'd expect them to be in the stack. So we went looking essentially for mezzanine level opportunities, and we focused in on a series of themes. So one of the themes was energy access. For years and years, we've been, very active in renewables and energy efficiency. But if you remember, the third leg of SDG 7 is, of course, energy access. And we basically concluded that, we couldn't invest in that through traditional Bank of America investments. So it had to be done through blended finance. And then a second area of focus was this whole area of natural capital. And again, we felt that this is an area that it's still, it's challenging to identify the business case, albeit, it's becoming clearer now that the market drivers are there. But we thought this was also an area that lends itself very well to blended finance. And so, basically, if you fast forward, so we've now done, 7 deals. Investment in Responsibility's Climate Smart Agriculture and Food Systems Transformation Fund, which is a new fund. It's $200 million, target raise. The objective is to basically provide expansion debt and technical assistance, and that's of course one of the merits of blended finance, is that you have MDBs or DFIs providing a variety of different components, some of which is concessionary capital and some of which is in the form of technical assistance and other forms of blending. And the intention of the fund is to really focus on agribusiness that has the potential to transform food systems into more sustainable, more equitable, regenerative, all of those attributes, which of course fit very well with the objectives of both the Paris Agreement and then also the CBD, which as we heard may result in in a breakthrough agreement in Montreal. So it's a very science-based approach. In fact, one of the partners is CGIAR, which some of you may know is a top-notch network of researchers who are very much focused on quantifying impacts, and that was one of the attributes that we liked, that it had a really solid science-based partner, and that it had already identified some metrics. And Katie, you were just speaking to the challenge of metrics in the nature space. So one of the things we like is that this one is very focused on transforming 300,000 hectares of land, and of delivering roughly 8 million tons in CO2 equivalent reductions over the life of the fund. So that's really the background on the fund. The fund will be taking positions that are typically sort of senior secured debt. I think I mentioned KfW, perhaps I didn't, but KfW is the key sort of anchor DFI that's come into the fund, and that's a partner with which we've worked before in other investments, so we're very comfortable with them. And maybe just to kind of link back to the earlier part of your remarks, for us this is sort of another way of investing in nature positive. We are of course very active in trying to work with clients on thematic and structured bonds, and thematic, for example, there could be bonds focused on the forestry sector. More recently, and in fact, coming out of the Sharm el-Sheikh meeting just last week, there's a focus on sovereign debt restructuring. So we're looking at that area, sovereign debt restructuring, with provisions that focus on debt for nature or debt for climate type provisions. You mentioned sustainability linked financing, so that's clearly a very active area for us. That would be, that's sort of incrementally improving what we're doing in the loan space, the bond space, trade finance, supply chain finance. But blended finance is, I guess as you described it, it's other. It's a different type of approach. And through this investment, we hope to learn lessons that we then think will be applicable to the balance sheet lending activity that we're doing, as well as the pipeline of companies that we think are high potential for equity capital raise in areas like regenerative agriculture, alternative protein, which we think is one of the most promising areas of the natural capital space. So that's the rationale. Happy to answer any questions that you might have or others may have.
Thank you very much, Abid, for providing that context and rationale. Really informative on top of the actual case study that you submitted into the paper. A question from my side would be, you've been working in this space for a long time. For many, thinking about natural capital and natural capital financing is really new. Is there any first step or two you would recommend to other banks or people working in banks whenever they're starting to think about how they might tackle this and explore this type of financing themselves?
Yeah, so I think, it is important to recognize that nature is different than climate. And, part of it has been, we've touched on that in this dialogue around, the one metric for climate and the multiple metrics for nature. So that is difficult, I think, for financial institutions to get their head around. But of course, help is coming through the TNFD. So I would say, even if you're not going to be an early adopter of the TNFD, I would strongly recommend engaging through the TNFD forum, so that you are aware of the emerging best practices. But my strongest advice would be actually try to be, you don't want to be a laggard, because of course ESG, as all of us know, is a competitive space as well. And I think investors increasingly want to know what the iceberg, the amount of ice below the water looks like for nature. So getting much more granularity about nature-related risks is key, as well as being opportunity-led and looking for some of the new opportunities that are arising because of the shift towards nature positive. I would also say, don't be scared by the complexity. It's easy to just be overwhelmed and say, whoa, there's not clarity yet on the metrics, and how am I gonna understand things at the sort of ecosystem level? What are the tools that are out there? So I would strongly suggest, doing kind of an internal heat mapping exercise, which is basically which would help every institution figure out where its materiality really sits, and that's the key. Is it a particular sector? Is it a particular geography? Is it a particular ecosystem? You may find things that you hadn't previously anticipated, and I think for all of us who are kind of part of global financial institutions that cut across different businesses, there's probably some surprises that may come in store. Better to know those sooner rather than later.
Yes, I can imagine there might be, when our operations are just so vast. No, thank you very much for those reflections, Abid, and those recommendations of first steps. I wonder, with Bank of America's huge commitment, an exciting commitment of 1.5 trillion and looking at all the SDGs, do you think you're going to be considering even more natural capital financing in the future? Is that going to be one of those SDGs that you tackle head on?
Yeah, I think it remains to be seen whether we'll have a separate breakout for nature. Certainly in our internal accounting, which we're very transparent about that. We will report out on specific contributions to different SDGs through different types of financial products. But I'm not sure whether we're at the point yet where we're going to say, okay, we want to allocate X by such and such year for natural capital. I think our observation is that the opportunities that we're seeing are increasing, and that I think gives us confidence that we should hopefully begin to close the biodiversity financing gap that Romy mentioned, and that we should all be making contributions to that kind of 10 trillion per year that I think WEF suggests is out there in terms of nature-related business opportunities.
Thank you very much, Abid. It's brilliant. It's so good to hear that from your perspective, you see the opportunities increasing. Hopefully that will be sufficient encouragement alone to activate lots of people in this call in this space. With that, I'm going to hand back to Oliver to round up the session and close this out. Thank you all very much. It was great to hear from you. And Abid, thank you for your reflections.
Thank you very much, Katie, Romy, and Abid for a really interesting discussion. I think it's clear that there's a vital task ahead of us all to work together to continue to scale finance in support of nature and biodiversity. I mean, I think as we heard today, we heard from Romy a clear message that we can't wait for a perfect framework, and I think the good news is that the momentum is building and progress is being made. Investor demand is there, and important work is underway to address some of the challenges that that Katie mentioned and are highlighted in the report, and really facilitate the role that capital markets and finance can play in this space. But I think we also heard an important message there from Abid, not to be put off by the complexity, and positive message that the opportunities are increasing. However, clearly there is still work underway and more needs to be done, I think, both across public and private sectors. And I hope this report and the support from the AFME members can really play a small part perhaps in helping catalyze action in this important space. So let's hope that further progress can be made over the next few weeks. COP15, really important work we heard about from TNFD and beyond. AFME certainly pleased to be a member of the TNFD forum, and certainly encourage other members to get involved with that as well. So just remains for me to say I'd really like to thank all today's speakers, all the work from the EY team, and the input from AFME members and colleagues, for all the input on the report. As Katie said, it's been a lot of work and thought has gone into it, and I hope you find it useful. We certainly welcome feedback on the report, and we'll be continuing to work with our members and policymakers to support continued development of sustainable finance markets, including in support of biodiversity and nature. So with that, just thank you all very much for joining, and I hope you enjoy the rest of your day. Thank you.